there. No reaction whatsoever, but we got something here, even though it didn't follow through. So price continued to extend the high, so we had equal highs. So I want you to take note, if price is reacting or is retracing, we are going to have either equal highs. If we're selling, that is, we're going to have equal highs. Price will pull back into an OB, price might pull back into a fair value gap, or price might pull back into a resistance zone. So in this example, we pulled into equal highs, created a fresh peak here in an order block, which was broken and retested. I actually scalped a sell here. Let's see, was it this? I think this was either before, this was after, just after swap time. I scalped this sell. I wanted to hold, but I was tired here. I wanted to sleep. So I was scared I would have fallen asleep and this trade might have just pushed up. So I ended up closing, I think it was maybe 10 pips or something. Then price retraced again into the same order block, nice pin bar there, and we had a sell. So how are we looking at this today? Currently, we're trading above the 13 EMA, but below the 50. So we still want to see what might happen here. We might still push down. We might push up. So at this point, price can go either way. But what we want to pay attention is the zone which was broken. Is price going to respect it again? Right here on this area, or are they going to push up? So in terms of daily bias, maybe someone might be asking, why don't we check the daily bias? So daily bias, what you notice is we had this rejection on the 13 EMA, and we still have this liquidity here. So if you're following our live sessions from Monday, you understand that our view is price might potentially get to around 5,500. But at the same time, we are open to seeing a retracement. If you see here, we've got this level marked. So price might retrace into this area before dropping, or they might retrace into the 13 EMA before dropping. This is on the daily time frame. But if we see something showing ourselves, we should take the sells, because this candle might still just go solid black or bearish. So I think for C 1000, let's just keep stoking and see what they will do. We'll just pay attention to H1 if we'll get some reversal pattern there. Then going to C5, I strongly wanted a sell. But again, if you follow the lessons, as much as we wanted a sell, I think we wanted a sell from as early as this area here. As much as we wanted a sell here, we did not get any close below the 13 EMA. That's a hint that price is going the other direction. So if I share a signal, a setup, and you don't see a close below the 13, just know that that signal is an early entry. We will only add onto that trade if price gives us a safe entry or price confirms the direction by closing below the 13 EMA. So for example, here we had no close, here we had a close, another close, retest, pullback, sorry, an impulsive move. Here we did not have a close. We had the structure, yes, the pattern was forming, but it failed. Price continued bullish. So right now we're still bullish as we are trading about the 50 and the 13 EMA. I do have this level here, which is a point of interest for potential sells. But what we're going to do now is do a multi-time frame analysis, daily trading about the 13 EMA. So daily looks like they want to be bullish and they want to push up. So with that daily bias alone, we should just be careful. If we get a sell, the sell could be short term and it could just be a pullback for the push up. But let's just pay attention here and see how this price plays out. We are only going to sell if we see a structure get broken. That's why most of the times I always say wait for the impulsive move first, then look for a setup when price retraces. So you want to get that impulsive move, wait for a retracement, then look for a sell. Get an impulsive move, wait for a pullback, get a sell. On this area, there is no impulsive move, right? So that shows any sell here was short term, but at the same time, H1 gave no sell setup. So in terms of C5, nothing too solid for today, as the daily is still on the bullish side. C3. What happened with C3? I think I tried to explain it yesterday. We were also eyeing sells here and we wanted them to come take out this liquidity. But also remember, price doesn't do what we want or what we expect. Price will do what it does. The only thing we can do is react. So initially we were looking for a sell here. This is specifically for the guy who was stalking on C300 yesterday but ended up missing the trade. So I just want to try and explain a few things based on the price action we had yesterday. So based on our analysis yesterday, you will notice that we had this point of interest number one, and we had this point of interest number two. At this break, we're going to sell. It's something we spoke about in the lesson, and it's something we spoke about even in the group. So if you're stalking a sell here, what you will see is price actually at some point this candle was black, then they pulled back up. Remember, we're trading below the 13 EMA, so bias is in our side, is on our side. We were bearish. So the only thing we were looking for was a sell pattern, right? So what you notice is for that sell to be valid, we had to break this line or this area here. So price didn't break, they came back up. Then they extended the high. We always talk about price extending the highs. We always talk about price extending the lows. So if you follow the sessions, already it's something you should anticipate. So price extended the high. Then from here now, we have this big move here. So we don't want to catch this big move. We want to catch something confirmed. So if the price is not clear on M15, we have multiple time frames. That's why we use multiple time frame analysis. So you could have simply jumped to the M5 to look for any pattern here. So on M5, you notice this is the same area. Price gave this impulsive move from this high. So you notice there's order blocks in there. You might consider this one as a retest area. And we also had our zone here for a safe sell. So price gives you an impulsive moves, gives you a clear order block here. TDI is now trading below the 50 level and below the baseline, mainly the baseline. Price comes, there's nothing wrong with having one position right here, just one position. Put your stop loss above the order block in anticipation of price coming back to this top order block here. If you cannot hold a sell here until here, just open one, have a stop loss. If price takes you out, you can still sell again if they react on this area. So in this particular area, you will notice that price actually reacted here. If you didn't sell here, just wait for this lower high to break the last order block right here. That's where you could have entered again. Then at the break of the safe sell spot, you can also sell. I think when I came to the charts, price had already moved when they highlighted. Then I advised a quick sell. We took a few pips here. Then price continued to drop a little bit, I think. Then it went sideways before price started to push up. So if you've got a bias, just look for a pattern to confirm your bias. If there's no pattern, then there's no trade. So at the same time, I also want you to notice that price ended up coming back to a broken order block from the day before. So notice we have an order block here and an order block here. Right here, we ended up coming just before 2 a.m. This is GMT plus 2. We ended up coming back here. So for a scalp trade, you could have taken a scalp knowing that this is the next zone where price might get to. Then if we break, you can continue selling. But if it bounces, then that's your scale out area. So it's all about understanding where price is going, how it's reacting, where it can most likely go to, what's the current trend on a higher time frame, what's the current trend on a smaller time frame. So that's how you could have approached C3 yesterday. So looking at it today, you can see we were strong bullish. For some reason, it just started to push up. So let's see on the daily, you will notice that we are now trading back above the 13 EMA and the 50 EMA, which gives me a bullish bias intraday. If you come to each one, you see from the moment the price opened today, we broke structure, pushed up, left an order block near a broken zone. Price came retested, broke a zone, pushed up. So we might get an intraday reversal, but in terms of a sell setup, I cannot sell until price comes back below the 50 or the 13 EMA. So you know me, with Crash, I only sell, with Boma, I only buy. So in terms of buy, I don't really talk or speak on buy setups on Crash because I only look for sells. So for now, trend looks bullish, and we'll just keep stalking to see maybe if we can get an intraday reversal. But otherwise, there's nothing there. Going to B1000, we caught a nice setup. I'm sure you guys caught it, or I hope you caught it, because this setup is the one which was supposed to actually recover any losses in CAD on C5 or any losses in CAD somewhere else. So B1 rejected this zone nicely. If you see, I had this zone marked. This is a weekly zone. Price sort of bounced off this area, but I mainly paid attention to this candle here. I think it was more visible from M30. Okay, if you drop to M30, you remember I mentioned, I'm not sure if it's the setup where I say these 3 hits to the 200 EMA, but anyways, what I want to highlight is on any given day, whatever you're trading, let's say price starts by coming down, you will see them respect a certain area and fail to break it. At that point, that's when we start hunting for a setup, especially if the area is a high time frame zone, like a support zone or an order block or something which you can use. So M15, M30, H1 will start hitting a zone. Two things will happen. Either they will break, leaving you with an order block where price can retest and you can buy, or price will actually extend the low, then break the order block, retest, potentially retest and push up. So in this particular example, I saw price stopped here. You can see they're not breaking. Then I saw this candle come slightly below, but come back and close above. And I had this price action breaking this minor structure. If you go to a time frame like M5, the price action there is so clear. So after seeing this, price retraced into the same area, and I took buys, and at some point it just moved quick. And I think I exited this trade here or somewhere, yeah, because I think I waited for a couple of spikes. Then this trade was just a quick success. So if you drop down to M15, you see there's the low, there's the order block, a break, a retest of the zone. Price played around the same area. They broke and retested again. So 2 chances to enter. Then I was out at the top of this candle, which gave me about, I think on this trade, I caught about 60 to 70 pips. And it played out. Then from there, price started retracing. So it's always good to catch the trade when the first setup of the day forms. Because usually, if you try to look for continuation patterns, price will most likely go either sideways or just change direction. So always try to catch the trade when the setup is still fresh and forming, so that you can get the best out of the setup. So looking at it today, I'll look at the daily because I want to see what's going on the higher time frame. So what you will notice is price is right on the 13. We are right on the line, which means there is really no clean direction here. So the only thing we can do here is patiently wait. If you notice, after this drop, I had marked this level as a possible area where price can get to before it sells. So as you mark your charts, these levels help you in terms of taking profit or scaling out. So after this reaction, you can now see from the H4 where price was reacting. So my zones were coming from H4. I had this level here, which was last week's highs. Also had this level here. So that's where price acted, and I was active in this 4-hour candle, and I was done for the day. So today, I still want to stoke and see what price wants to do, because what you'll find out is they might end up still rejecting this area, because we also have an 800 EMA here. So from a higher time frame, this is a higher time frame dynamic support zone. So price might still bounce here and push up, but at the same time, we are bearish. So if you are bearish, we cannot force anything right now. 4-hour bearish, daily is in the line. There is no directional bias. H1 is also sort of on the line. I can only consider a buy if price comes above today's highs. I might consider a buy here. So on your H1, you just want to mark today's highs. So if price breaks here, then I might consider a buy. That's another level there, which we can just mark as a point of interest. So if we get this, then I can consider a buy. But price might most likely continue pushing down. But if you notice, I've got a zone here. I'm not sure from what time frame, but if I do get a reaction here, I'll also consider a buy. But as of right now, we are on the selling side, and there's nothing solid here until we break this high, maybe retrace a bit and push up. So that's my view for B1000. Nothing too solid there. So nothing solid on B1. C5 might load, so keep stalking on C5 in case we break the zone, but nothing too solid as well. C3, nothing solid there, bullish. C1, keeping an eye here. You can see here H1 sort of rejecting here, so we need an H1 candle to give us that confirmation. B500, did we trade B500 yesterday? I think we might have. Okay, this is the one which had 3 hits to the 200 EMA. 3 hits, of which the stop hunt was already done on the first leg with the spike. If you notice, second hit didn't take it out, third hit didn't take it out. Safe buy is right above this area here or right above this order block here. As long as your H1 comes above the 13 EMA, then the buys will be good to go. But each time you see 3 hits to the 800 to the 200 EMA, just know it's a high probability trade and you should take it. So this one pushed up. Nice move here. I think I was done on this level. This setup was already complete for me. Then what ended up happening is oh, I also want you to pay attention that I had this impulsive move from here to here. That's why I ran this fib. If you notice, there's a fib here, right? So price came and it was reacting right on the 70 and 61.8, giving me a solid pattern. So after seeing such, the only thing you can do, guys, is to execute. So what are we looking at today? Price's potential of completing the pattern from that fib which we have. So we might potentially push to TP1 area. H1 is trading above the 13 EMA. M15, what do we have here? Let's see. Okay, let's actually have one buy position and current market price on our B5. So we're going to open one position at current market price. Okay, let me see. I'm actually okay. All right. Open one position and current market price. Why are we opening one position now? Because the price looks bullish. Everything is bullish from the daily. If you were to look at it from the daily, open the daily chart, you'll notice that we're bullish. H4 bullish. M15 now is where we look for a pattern. So which pattern is making me buy here? First is yesterday's high. I want you to notice that price is rejected off yesterday's high right here, and we're sort of bouncing here. And based on previous price action, which I've seen through the years, I know this trade is the probabilities of this price pushing up are high compared to the probabilities of this price coming down. So we're working with probability here. When we drop down to M5, you will notice that price is respecting the 52 bounces. So from this higher low here, where is the order block? The order block is right here. So now, after I give this order block, the next thing which I want is price to retrace into the order block. Then I can add another buy. So the exact price of the order block here is 6,000. Okay, let's just put 6010. 6010. 6010. That's a buy limit on B5 right now. 6010, that's a buy limit. So usually I use buy limits and sell limits if I'm confident with the trend direction. And you hear me use the 10 points of interest if I'm still waiting to get a confirmation. So on this one, I'm in a bias already, so I can be confident to use a buy limit since I'm already active with a runner here. So usually you just have to go through all the time frames just to confirm if your direction is right. Then after that, you can just look forward for price to hit your TP. So in terms of TP, maybe we can target 60, 61. Let me see what's happening at this price, 61.10. Okay. In terms of overall TP for this move, there's a high probability price can get to 61.15. So this trade is almost like 100 pips. If you look at it this way. So we've got our setup mapped out. The only thing we're looking for now is confluences and reasons to add. Confluences and reasons to add. So if you look at it again from the M15, you notice we've got a double baseline bounce. Excuse me, as confirmation. So if I was on the chart a bit earlier, I could have still even executed a buy here. That's how confident I was of this pattern, or that's how confident I am of this pattern. So we've got a double baseline bounce, confirming what we already see. If we get that retracement here, then we are looking for longs. So if you're on PC, you can play around the time frames, check M3, M10, M20, just to confirm your confluences. When time frames line up, at times you end up maybe with 5 positions just because of the confidence you have after checking multiple time frames for confluence. So again, when you drop to M3, the only thing I'm looking for is baseline bounces and retracements or order blocks so that I can have buy limit areas. So from M3, you notice that I also have a point of interest slightly below 60.10, which is right here. Then if we jump to M10, nothing much to use, but you can see the confluences of TDI. Here it's bouncing off the 50 static. Then if we go to the M20, what do we have? Just a slight bounce off the baseline bounce as well. So I feel like our setup is all right. So one position right now, then we wait for 60.10. So I'm just going to quickly put a buy limit on 6010. The art of scaling in, that's something you guys need to just learn, because scaling in comes from your psychology. It comes from screen time. It comes from seeing patterns play out over and over for months or years. So I might tell you to scale in, then price drops, then you have a big loss than you had intended. So scaling in, I would advise you to just keep on showing up every day. Some patterns you will notice, some patterns are high probability, some patterns are low probability. So if this price comes and taps here, then starts to push up, this setup becomes high probability and you can add. That's where you see me scaling in. Then even if I can get 30 pips, after scaling in 30 pips is gold. Because instead of having one position and trying to run for 100 pips, I can have 3 positions and just run for 30. Or I can have 4 positions and just run for 30 pips. And still make the same money which I would have made by holding, but I'll just make it in a shorter space of time. So that's also one thing you need to take note of. So B5 is our current setup right now. V2501S, we had a nice sell yesterday. What I want you to notice about this is, even though the daily has got nothing too solid, on the H1, nice break of structure, a retest, price continued pushing down. So from this high here to this low, this is where I had run the fair. But if you notice, price actually extended this low. So I think I actually scalped a sell here yesterday, right on the 13 EMA. scalped a quick sell back to these lows. Then when I saw this price action, I exited. Price pulled back all the way almost to the 100 points. Then they started again pushing down. So from here, you can formulate a pattern. As long as you've got a high, an order block, and price comes below the 13 EMA, you can sell. So again, we had a nice sell yesterday. So looking at it today now, you can see from the daily, the price action is not too clean. So nothing too solid as we might get a pullback going back up. So looking at it from the H1, I don't have anything too solid which I can share with you guys on V250 as I'd rather wait again and see if I can get something solid maybe a bit later. Step index, H1 looks sideways. So if you're used to trading, if you're day trading, H1 has got all the information you know. The only information you need is from a few days ago, like maybe 3-4 days. That formulates its market structure. It's either price will be trending down or trending up, or either price will be sideways like this. So for the past 1, 2, 3 days, you can see now we literally going sideways. So now you have to adjust how you trade. If you're going sideways, you cannot use your fib. If you're going sideways, you cannot use the moving average. If you're going sideways, you can only mark the high and mark the low and wait. That's the only thing you can do. So step index again, I've got nothing here for today. Nothing on step. I only have these two zones marked. So let me extend them until the end of the day. Then maybe tomorrow I'll speak on this after price moves. Then I'll tell you what to expect. But what I just want you to pay attention to is price broken order block here and retested. So that zone there is still a point of interest. So if we get this, then price might come back up here. At the same time, price might come and just spike out, then fall back into the range. Price might come, spike down, fall back into the range, or they might break and retest. But until they do that, they can go either way, and we've got no setup here. Personally, I have no setup based on how I trade. Then rounding up with J10, we also had a nice sell yesterday. You can see this is a structure marked all the way from this day, the 13th. So we broke, didn't retest. We only retested on this particular day. We broke another structure and retested with a nice pin bar. Broke another level, came back and retested yesterday with a double M. There's a certain group of guys who I'm doing lessons with. I want you to take note of the pin bar. This is a setup we were speaking on last week. A pin bar on a second leg is always a high probability. So if you guys are watching this video right now, write it down somewhere where you can see it when you trade. Every day, if you come to the charts, or any day when you come to the charts and you see a pin bar on a second leg, just know that trade has got a high probability of being high probability. So first leg, second leg, you get a pin bar. If you are not confident of selling here, just wait for price to break an order block. Wait for a price to come below the 13 EMA. Once your bias is confirmed, sell, 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 sell wherever you sell. Drop to smaller time frames, wait for pullbacks, and jump into the trade. It will most likely play out. So we had the pin bar. Usually I like to see it on M15. So from H1, M30, M20, M15, M5 if it's visible. Second leg pin bar, high probability trade. So how are we trading it today? I would love to quickly check the daily. Daily, you can see we hit equal lows. Soon as we hit equal lows, price started retracing. So I feel like the trade has already moved here. Did we get a pattern though? Lower low, broken order block. You've got a trend. Yesterday's low, that's where you scale out or take profit. Because at this point, price can either bounce and continue dropping, or they can come up, retest, and continue pushing up. Right. So based on how price is moving and based on your bias, you can formulate a trade. The other thing is here, okay, for this on step, the setup is already played. Maybe you might look for sales here for the 800 EMA and around yesterday's high. Sales might happen, but usually after a move like this, I hate trading because sometimes price will start going sideways, where they can literally give an equal move coming back down. But it's always best to trade what you see at that particular point. But here the buy already happened. So we have the first impulsive move coming to these highs, right? So if you wanted to trade a continuation, you would have been waiting for this price at this order block here, or you pay attention to this. So here, there's a nice doji here on 38.2. Once you see that, trade is valid, stop loss below the zone. Sometimes they will extend, take you out and form a new pattern here, then you can buy. But on this particular example, you can see nice rejection. We're still above the 13 EMA. At that point, I think even H1 was above the 13 EMA because H1 is to be your best friend in terms of day trading. So if you notice the first move, we're still below. So if you're skeptical, you just have to wait. We wait for a reaction on the 13 EMA, either we'll sell or we'll buy. So after this reaction here, at the break of that high of the last candle, then price came above the 13 EMA. So what might happen? Maybe we might get a pullback and a continuation up. These are just possibilities of what could happen. Also, if you notice from the H1, the order block is as high as this area. So maybe price might just come here and continue pushing up since there is so much acceleration here. So just keep that level marked as a point of interest. Okay, want to mark this area. So it's a whole zone. This whole candlestick is the zone, but I just like to mark the small parts here. So that's it for J10. Step, we wait, V250, nothing. B5, waiting for the, I think the buy limit is activated. Let me check. Okay, buy limit active. So B5 is the current running setup right now. B1000, this for me looks like they could buy. H1, we are now above the 13. The only thing though, which is making me not so confident is that we've got a zone and a 50 EMA. So the buy could be short term, but it could happen right now. So let me quickly check M15, see if we can buy this trade right now. Yeah, possibilities of buying are there here. If you're not too scared of B1, you can have a position. But this is one thing I also want to stress out. You notice that we've got 1, 2, 3, 4, 5, 6, 7, 8. I've got 8 assets on my watch list. But in a day, I only look to execute on 1 or 2 most of the times. On 1 or 2. So at the same time, do not open trades on everything. Like open B5, open B1, open C3. That messes up your risk to reward ratio. Trust me, it will, no matter what account size you have, unless your account is 5 figures, then you can open on every asset or whatever setup you see. But if your account is small, I want to tell you now, do not open a position on B1, then open positions on B5. Because right now on B5, we are running on 2 positions. So based on your risk, based on your account size, if it allows you to open on another asset, you can. But remember, B1000 these days, you have to be willing to hold 30 pips of loss here. For example, here right now, it's actually a 40 pip stop loss. So are you able to hold 40 pips of stop loss? With the smallest lot size, 40 pips is $8. So are you willing to hold the -8 at the same time holding 2 positions on B5 with whatever risk you have? If you can, then you can have a buy here. But again, I'd rather want to see price actually break here than jump into the buy. But this looks like a buy pattern for me. Let me just check M5. Definitely looks like a buy pattern for me. Right, but for now I'm active on B5. If you've got multiple accounts, then you can have one buy position, just one until price confirms. So the first position we open is always to get your emotions involved, because sometimes when your emotions are involved, it forces you to like analyze price properly because you don't want to lose your money. So if your trade is wrong, or if the setup is wrong, then you can quickly cut the loss on that one small position. It's easier to manage loss. That's what I think. So B1000, if your risk is all right, you can also have one position here. Then we want to wait for price to break here, maybe and retest. So we want an impulsive move, then a retest. Then we can buy again comfortably and look forward for price to actually get to this area or even maybe higher. So that's how I'm looking at B5. C3, we said we're going to wait. Right now, it looks like it's a retracement, which could happen. C5, we're actively stalking. C1, we're actively stalking. So for now, I'll just leave my charts on B5 and B1. So that's it for me, guys. I don't know if you've got any questions. Let's see. Did you set an SL? Stop loss is always 10 to 15 pips. The thing is, most of the times I don't really set it if I'm watching the charts. If I'm on the charts like this, I don't put a stop loss. But let me show you where the stop loss is. Stop loss is just below the zone. Remember, for every setup I trade or for every signal I share, if I don't say stop loss is this value, just know that my stop loss is below the last zone on M5. It's usually M5 most of the times. Stop loss is to be below the last zone you see. That last higher low you see, that's your stop loss. Because the reason we use that, I'm going to explain it here. If price is pushing up, I think I also explained it yesterday. If price is pushing up, probabilities of price coming down here become low, or price coming down here become low. You can expect equal lows. Yes, that can happen. But stop loss has to be below the last low which you can see. So that's where my stop loss is. So in terms of calculations, that will be about 25 pips. It's a 25 pip stop loss. Then this limit which we had has got a 16 or rather 15 pip stop loss. So if price starts to push now, let's say from here we get a spike, that means this is the new higher low. That will mean I'll automatically move my stop loss from here to here. Then I can scale in. Whatever I scale in here, stop loss is now here on the last low. This applies for every trade, whatever you trade or whatever I trade. That's how I do. Because people always ask, where's the stop loss? Stop loss is always below that last level you see. That's your stop loss. Unless, of course, maybe if you're swing trading, then it becomes different. Because if a swing trader now, their stop loss is to come below the last low on H4. You see where the stop loss is to go.